given, Jingyi, this economic backdrop that is improving, but it might not be improving as quickly as many would hope. What do I do with that information as an investor?
Well, good morning, David. Thanks for having me here. So I think certainly, that's the kind of picture that we are getting. The global recovery is underway. There's this optimism that's seen in the market, but there's all these sub-trends that I think we are seeing, and certainly, for markets likewise, that's going to be the kind of indication for how, where to really, I think, see the money be flowing to. To a large extent, I think what you pointed out to many of the well-developed countries going into 2021, we're expecting better performance. The likes of China, for example, I think certainly been seen as one of the bright spots in the region. And I think on this end itself, it really doesn't so much change the kind of conviction traits that we had going to the new year, and that's looking at many of the Asian markets as well. But of course, in addition to that, I think it's going to be gradual, but I think the direction that we're stepping in is still towards recovery. So many of the cyclical stocks certainly wants to look at it as well, David.
How long do you think, and not to downplay, of course, those calls, because not a lot has changed since the start of the year, but at some point, do you think there will be a point in this first half that you might need to rethink some of those calls, given, of course, a slow recovery that we're seeing so far?
Yes, David, definitely a very fair point over there as to, the resurgences and how that's altogether translating to the economic momentum. And I think, certainly for financial markets as well to gauge the kind of earnings performance in the new year. But what I think, I just really want to point out as well as we look to the COVID-19 daily cases, we are going to this period in the start of the year where you have this peak that's really outshining the previous ones. But yeah, at the same time, I would say when you look at the economic performance, I think, there have been this kind of PMIs showing, perhaps not for the likes of Europe, but across the likes of US, for example, and Asia, China, these are holding up, I think, still in recovery pace. So I think it's a bit of a reaffirmation towards what we are seeing right now. But of course, David, I think you pointed certainly out as well that the biggest devastating issue remains the pandemic. So the likelihood of, some of these mutations really seeing to more lockdowns and, the faster spread that could really hamper economic activity is still very, very important as a risk. But so far, I think we are seeing, I think just really the indicators coming through on the surprise side.
Jingyi, the U.S. stimulus is buoying sentiment, helping to sustain the rally that we're seeing. But we're also expecting higher taxes for Biden to pay for the spending that is expected. I mean, on balance, how will this play out in the market?
Yeah, well, Haslinda, this likewise, I think is a very important point to look into. And I think, certainly for forward-looking markets as well, we have seen markets so far trading to that recovery theme. But likewise, with the Biden administration, that adds to the equation. From what we are seeing right now, the kind of rhetoric coming through from the administration, from his selection of Treasury Secretary Janet Yellen, and her comments altogether is pointing to a time function once again. And I think, the market is looking to, at least in the near term, to end of this year, I would say that we are going to see, the policies, fiscal policy, monetary policy staying on the supportive side. Taxes, I think, is definitely going to get into the conversation. But I think at this point of time, what's more urgent is really still in terms of pushing that fiscal stimulus through and seeing that actually being passed down as well to the relevant parties. So I think, at least at this point of time, all these is holding up, at least supportive for markets. And of course, we have to talk about earnings as well. So that's really coming to the picture.
And Jingyi, what does it all mean for emerging markets? Some say they're showing signs of fatigue.
Haslinda, I think, in terms of the emerging market picture, likewise, we have seen quite a bit of a steep run for markets. I would just have to point out, if you look at the likes of the emerging market index, for example, certainly into January this year itself, it's taken a bit of a steeper upturn. And on that end itself, I think, yes, a little bit of a breather at this point of time, I think is a bit warranted. Just really, I think, as the market step a little bit back to assess the kind of situation situation. But I think, in terms of where it is going, the kind of factors supporting this, whether you're talking about policy-wise or just really the gradual vaccination that, it's expected to be underway. We hope that, with what we have seen, for example, in some of the program, that's going to likewise see to emerging market benefiting as well. But I think, the direction continues to be one for reopening, and I think that could well see to that continuing. Just really, I think in the short term, that's a little bit of just cautious in terms of the trajectory.